Today, we're going to dig into a stock's massive collapse. We're looking at AiRWA, ticker YYAI, to figure out the technical story behind its insane price drop. Let's get right into it. Believe it or not that long ago, we're talking within the last year, YYAI was flying high at $6.71. That was its peak, the absolute top. Keep that number in your head.
Because today, that same stock is trading for just over 12 cents. Yeah, you heard that right. From over $6.50 down to pennies. The contrast is just staggering, and it immediately begs the question, what on earth happened here?
And just to put that into perspective, the stock is now trading at less than 0.2% of its 52-week high. I mean, it's basically flatlined near its absolute bottom for the year. So let's jump into the charts and see what's driving this freefall.
All right, first up, let's decode the downtrend. We're going to look for the clearest signs of this kind of sustained price crash.
So, what exactly is a downtrend? Super simple, really. It's just when a stock's price keeps hitting lower highs and lower lows over a long period. You know, think of it like a student who keeps bringing home a worse and worse report card. It's not just one bad test, it's a consistent negative pattern.
And this table right here, wow. It really shows you just how bad YAI's downtrend is. I mean, the current price of 12 cents isn't just a little below its short-term average, it's miles below the long-term ones. The 200-day average is $1.40. And get this, the 200-day exponential average, which gives more weight to recent prices, is a mind-boggling $9.52. This stock is completely disconnected from its own history.
And it's not just the averages that are screaming sell. Look at these other technical signals. The MACD, negative. That means downward momentum. The AiRWA oscillator, which tells you how strong a trend is, also negative. And check this out. The minus DI, which is basically seller pressure, is way stronger than the plus DI, or buyer pressure. Every single sign is pointing to one thing. Sellers are totally in charge here. Okay, let's move on to our next section. Now we're going to follow the money by looking at trading volume. You can think of volume as the crowd noise around a stock. Is the crowd cheering, or is it booing? And more importantly, how loud are they?
Well, the volume is loud. Right now, this stock is trading at over 2.5 times its average volume. Now, high volume by itself isn't necessarily good or bad, but when you see it paired with a price that's falling off a cliff, that tells you a very clear story. A lot of people are scrambling for the exits. They are actively dumping their shares.
And this right here just confirms where all that money is going. The on-balance volume, which is a running total of buying versus selling pressure, is deep in the red. And the money flow index, it's signaling extreme selling. So yeah, all that heavy trading we just talked about, it's overwhelmingly negative. Money is just pouring out of YYAI. But just when the story looks totally hopeless, the data throws us a curveball. I mean, everything we've seen so far points to a stock that's basically circling the drain. But our next set of clues, well, they suggest things might not be quite that simple. And this brings us to a really interesting concept called oversold. So what does that mean? It's when a stock has just been hammered by sellers so hard and so fast that its price has fallen way too far. It's like a battery that's been so completely drained that it literally can't go any lower. All it can do is either stay dead or maybe start to recharge. The selling pressure might just be completely tapped out. And one of the best ways we can measure this kind of seller exhaustion is with something called the Relative Strength Index, or RSI. As you can see on this chart, YYAI's RSI has dropped to 28.61. Now, anything below 30 is pretty much the universal signal for oversold. This is a huge red flag that the non-stop selling could be running out of gas. And there's more. A statistical model called linear regression, which basically predicts where the price should be based on its recent trend, suggests the stock ought to be trading around $1.03, but the actual price is just 12 cents. That massive gap is another really strong indicator that the stock has been pushed way below its trendline value. It just adds more weight to that whole oversold argument.
So, what does this all mean? We've got this brutal, powerful downtrend on one side and a deeply oversold condition on the other. It's setting up a classic tug-of-war in the market. Let's break down what could happen next.
To really get a handle on the next move, you have to watch two absolutely critical price levels. First, you've got the support level, down around 11 cents. Think of this as the floor that's been holding the price up so far. Sellers are desperate to smash through it. Then you have the resistance level, up near 14 cents. That's the ceiling. Buyers who think the stock is a bargain now will try to blast the price right through it. These are the battle lines, plain and simple.
And this leaves us with two totally different possible futures. Okay, so in the bullish scenario, that oversold condition acts like a coiled spring. For traders who love high-risk plays, this might look pretty tempting. If buyers jump in and manage to push the price above that resistance ceiling, it could be the first sign of a real recovery. But in the bearish scenario, the sheer force of that downtrend is just too much to overcome. Sellers break right through that support floor, and the stock continues its nosedive, probably heading to even lower lows. And that brings us to the big final question that sums this all up. All the technical data we've looked at points to this one single conflict. You have a stock that is, without a doubt, in a powerful downtrend, but it's also screaming that it's oversold. So if the price does start to tick up, is it just a dead cat bounce, a tiny temporary blip in a falling market? Or could it be the start of a real, genuine turnaround? The answer to that question is going to be decided right at those key levels we just talked about. It all comes down to who wins this fight, the bulls or the bears.